was frustrating to me, Danny, is that gold was making a move all by itself, and we weren't getting confirmation from the white metals or the stocks, and that was concerning to me. But now we're getting confirmation. I think we're getting ready for some really important times ahead, as unfortunately our fiat economic debt-based Ponzi scheme starts to unravel even further.
You're watching Capital Cause, and my name is Danny. It is June 6th, 2025, and my guest today is David Morgan. And we couldn't be more timely for this interview, David. It's at the end of the week this week, and it looks like silver could be closing above 36. Most likely is going to be closing above $35. What's your take on what we're seeing in the silver market? Is this the big one?
I'm going to tell you, Danny, I think it is. And I actually had an interview yesterday, and I use what's called the Morgan rule. All my members know this rule, and it's not to my ego, but it's just my experience of trading futures for so long, which I still do, but very seldom. So the rule goes like this: once we get our breakout point, which is roughly 35, the commodity, be it silver, be it oats, be it soybean oil, be it a stock, has to stay above the breakout 3 days in a row, and it has to be on above average volume. And if those parameters hold, then 80-ish% of the time, it will continue. And so people say, well, why would you get in at 36.72 rather than 35 at the breakout point? And the answer is because it can fail, and then you've lost money. So you're better to get in a little higher with an assurance that it's going to continue than to just try to make the breakout. And that rule has served us well for many, many years. I did so much study on technical analysis from so many different teachers, and I learned a lot, but it got really way overcomplicated. So I decided when I started the Morgan Report, I was going to simplify everything as much as possible. Basically, I'm a pretty good chart reader, but it's an art, not a science. And that I wanted to keep it very simple. And so that's it. You don't need a computer. And since we're in day 2, we're already, 2 days in. And if on Monday's close we are above 35, it could retrace from, let's say we close at 36.20 today, and then it retraces down to 35.20 on Monday. We're still above the 35 breakout point, and I checked the volume. Volume might be higher on the downside, but we still did the parameters, in other words. So there we go. And of course, platinum is confirming. Platinum's done a nice job. It actually broke out a bit earlier than silver. And so if you had read my report 2 months ago, I basically said put a tight stop on gold. It's going to go sideways for at least the whole summer. So far, I'm correct. And switch or trade into platinum and silver. And my members, if they did it, are very, very happy. And the silver stocks are even starting to move now. So we're getting confirmation of the major bull market. What was frustrating to me, Danny, is that gold was making a move all by itself, and we weren't getting confirmation from the white metals or the stocks. And that was concerning to me. But now we're getting confirmation. I think we're getting ready for some really important times ahead, as unfortunately our fiat economic debt-based Ponzi scheme starts to unravel even further.
Yeah, so it seems like we are in stage 2 of this first leg up in the first legs. If you start the leg back in 2023,
yeah.
But we are in the stage 2 right now, when you start to see the rest of the precious metals complex start to get a bid. Here's platinum for those who may not know. I have not been keeping up with platinum, although I probably should have. It's 1160 today, and looking at it from the daily candlesticks, you had 1, 2, 3, 4, 5 big, strong green candlesticks. And even if you go all the way back to April, it's been primarily green candlesticks all the way up. So that's a pretty strong indicator of momentum there. Platinum, here's silver. We alluded to it at first, where it looks like we may be closing. I hope I don't jinx it, but by the time the video, hopefully by the time the video comes out, we are above 36, but we are right at 36.03. And yeah, we had a big day on Monday to kick things off, and a big day yesterday on Thursday. But that $35 level is paramount. Now, you see, we hit it here multiple times, or just about multiple times on the daily candlesticks back in October of last year and then March. And now we've finally broken out. And if you look at the weekly candlestick, we've broken out. And the last time we were at this level was back in 2012, October of 2012. So, and you also mentioned the silver miner. So that's SIL. I think it's a very important note that you've made here, because the silver miners are even further out the risk curve than silver is from a precious metals perspective. So why is that important? Why is it important that you start seeing the miners get a bid here, like we're seeing here right now? And I mean, you look at this resistance line built up in SIL, the silver miners ETF. It looks like we're well above that breakout line. What say you, David?
Well, it's important because, silver above ground minted in the coin's wonderful. And, I've taught for years to save in real money, silver and or gold. But without the miners making a profit, you're not going to get any silver above ground. And a lot of these silver miners are marginal at best. Now, we both know, Danny, that 70% rough number of the silver above ground gets there because it's copper mining or base metal mining like lead or zinc. 35% of the market, about 25% is copper, and 13% of the market is as a result of gold mining. But the primary silver produces about 25% of the market, 25%, 30%, somewhere in there. And if they're not making a profit, then that whole basis of silver mining goes away. And so it's got to be confirmed. So for those entities to stay in business, they need a profit. They need actually a decent profit. They're marginal right now. So this is a good sign. And I think with the momentum, and as you showed with all the green candles, we're in a situation where you're not too late. In fact, I like to tell this story, if you let me digress for a moment.
Sure.
There was a guy in Forbes magazine. I forget his name. He was a futures trader, and he'd have good years and bad years, good years and bad years. And he took like a year off and he studied everything he'd done and every trade he made, and the ones that went wrong, the ones that went right. And he came to his own trading methodology. And when the 1980 bull run happened, or 79, 80, he got in the silver market. He got in at like at 15 and he got out at like 35. But that was a matter of I would have to look at a chart, but probably like 15 trading days, if that many, maybe 10. And he told his wife, "We're out." Well, she'd heard we're out many times, and cattle, pork bellies, cattle futures or whatever. He goes, "No, we're out. I put so much in and we made so much money that I'm done trading. We're done. We're retired. It's over." So that was, a guy that sat there, traded futures for a long time, was fairly successful, came up with his own plan, and he did what I call middle it. He waited for the momentum to get really strong, got in at 15. I said, "Well, you could have bought silver for $5. Yeah, you could have bought it for $5 and waited for 15 years. Or you could get in at 15 and wait for, 2 weeks and get out." So he basically knew what he's doing. He didn't get too greedy. He sold in the strength. And that was a lesson that I've learned long ago, but not early on. I mean, most of the times that I'm showing my members how I'm trading or when I'm getting out or why, especially when you're leveraged, I show them you want to sell in the strength. You don't want to wait for the market to peak, because now there are no buyers. There's only sellers, and it will come down fast. So I've called the top in silver every time on the way up so far. My bottom calls have not been that good or as good, but on the way up, I've caught every top. And the last time in 2011, when I called the top last day of April, early May 2011, I got some gifts, not monetary, but some gift baskets, you might say, that came my way. One guy said, "Man, I was so leveraged, and everybody's telling me it's going to 100, but I adhered to you and came to your workshop, and you called it, and Thank you, thank you, thank you, man. I would have made the biggest mistake had I gotten greedy and gotten, tried to hold on for that $100 mark or what everyone else was saying. So, and I'm not trying to brag. Believe me, I probably made more losing trades in silver than I've made profitable trades. But on balance, I've made money. So in other words, I can make three small loss, small loss, small loss, make a good trade, and that one trade makes up for 10 of those small losses. Follow what I'm saying? So you don't have to be right all the time to make good money trading, but you have to be disciplined. You have to absolutely adhere to your own rules. If you don't do it, then you're in the wrong business. Start selling shoes, start, doing something else. But trading it's easy and it's hard. And I know that's a contradiction. It's easy if and only if you have the discipline that most people cannot acquire. If you cannot do that, if you think that you set a parameter and it goes against you and you change your mind because, well, next tomorrow it'll come up or whatever, that you're not in the right field. There aren't too many people that can invest and trade. I do both. I much prefer investing than trading. I built my platinum position over a year, and my average cost is probably 950. So
Plus,
where I'm sitting now.
it's kind of a hassle to trade these metals. Like,
It's
imagine if,
hard.
yeah,
I don't have. I mean, I've got good energy
yeah,
still, but
it's like the physical metals. Yeah, like
yeah.
having to go back and forth to the gold
Oh
and silver shop.
yeah.
But I think you bring up a great point. Systematizing your investing strategy is, I believe, not many people are have done that. Which it needs to be tailored towards your tendencies and your personality type.
Well, yeah, one of the guys that was a big fan of Harry Brown, which was, one of my many mentors, and I got to actually get a personal relationship with him before he passed on. But I, one of his disciples or admirers started a day trading school, and he invited me down to L.A. and I went through the whole school, not the whole program, but and I'm pretty convinced that you can day trade, but me personally cannot. To me,
Mm.
it's like playing a video game. I'm not a video game player, and it seemed like way too much work for me to scalp a market and make, a percent a day kind of thing. I much rather like I'll give you a good trade that we did years ago. I did a short, and I love spreads. They take less margin, and you only have to be half right to make a small fortune. So I shorted palladium and went long platinum.
You're looking for great deals on gold and silver coins and bars from a company that you can trust, then you've got to check out the good folks over at Pimbex. This year, I've really gotten to know these guys, and all I can say is you're not going to deal with a better group of people. They're a family-owned gold and silver online bullion company offering the essentials and more at industry-leading prices while always providing first-class top-tier service. That's PIMBEX.com. And if you're looking to convert some or all of your retirement account into real gold and silver, give Pimbex a call. They'll help explain the process and get you started on the right path. Your support at Pimbex also helps support the channel. So reach out to Pimbex today. You won't be disappointed. And make sure to tell them Danny sent you.
Now, if you look at when I did that, palladium was around the $2,000 level, and platinum was probably under 1,000. And eventually platinum went sideways. So I was kind of wrong about platinum going up, even though that was half of the trade. The other half was that palladium was coming down, and it did, and it did, and it did. And I got out of that trade after over a year. And you can imagine on a futures market with pretty low margin on a spread trade like that, it mounts up really nicely. And I got out. Now, it'd be better to get out yesterday than when I got out, which is several months ago, Danny. But I got out when the platinum palladium price were pretty much at par. So I went from 2,000 to 1,000. Platinum didn't really go up, but against palladium it did, or the spread worked in my favor. And I did that on a copper gold trade way back. I was in London. I told there's a hedge fund manager about the copper gold spread. He made so much money. He called me up and said, "Can I send you checks for what?" I mean, I could have invoiced him for a consulting fee, but so he basically buys my mastermind service every year, which is my highest price service, just as kind of a courtesy to me. I mean, I didn't tell him to do it; it's his free will, but he was blown away by that trade, and he was a pro. I am too in a way, but I'm not a as you know, I'm not a registered investment advisor, nor do I wish to be. I worked for them. I was in that field, and I got out because the what I was able to determine for myself was a lot of that stuff is rather contrived, and you're kind of taught to push a certain equity, perhaps, that the company owns that they want to off to their clients, which to me that's unethical.
Right. And so, given the fact that we have seen silver, platinum, the silver miners start to get a bid, it does appear like this precious metals bull market is maturing as others have. Now, when you start entering this stage two process where capital starts coming into the more risky, going further down the risk curve, in this case, to the silver miners, what happens to gold? Does gold still get a bid in this process, or is it just gold continues to get a bid, but it becomes getting outperformed by silver and the things further out on the risk curve?
That's exactly what happens. You get the white metals start to accelerate versus the yellow, and that's one of the indicators I'll be watching to call the top because gold is really establishment, even though no one will say it. I'll say it. But the central banks, not all, but many buy gold. It's on their balance sheet. They look at it as a monetary metal, even though they don't say that in public. And so it's much more of a conservative establishment type of a purchase, whereas silver is not demonetized officially. Unofficially, it's metal, it's money. And it's a higher risk to reward ratio because it's such a small market. But in all major bull markets so far, silver has outperformed gold. Platinum used to sell at a huge premium to gold, like double, and yet now it's cost one third, or actually a little less than that relative to gold. So I'm looking for a pretty big acceleration in the white metals versus gold. But gold will probably make it to, I don't know, as a conservative number, maybe 5,000, could go to 10. No one really knows. But as we're getting from, let's say, 3,500 to 5,000, you might see the gold ratio come down to 70, 60, 50 is about the mean for the last 50 years or so.
Wow,
So I
50.
expect to
Yeah,
see,
so
yeah,
it's at 100 now, or close to
yeah,
100.
yeah,
So that would assume that, assuming that the gold price stays constant where it is, and it's most likely not going to stay constant, that would assume a doubling of the silver price to
correct.
meet a parity of 50. Now,
Yeah,
if gold continues to move up, albeit slower than silver, you would need an even greater multiple from where we're at today on
right.
the part of silver.
Yeah,
And of course, if it goes down, it may not need that much of a move to the upside, but
right.
50 is still a pretty big swing to mean revert to.
It is, and that's why, but I teach, for people that are members, I have the first thing they're supposed to read is how to use the Morgan report. And I give suggestions or guidance, you should own this much physical. And then after you establish that, you go into the stocks and they are in this manner, 70% top tier, like 20% in the mid tier, and maybe 10% speculative stocks. And in the physical, I say the older you are, the more you should favor gold over silver because it doesn't have the volatility. It's more establishment. It's bigger market. There's so all those things, and and it's true, and that's why I wrote it. It's guidance. Some people still at higher age levels still have a pretty strong silver position. I do personally, but it's it's not. It's it's more risk, plain and simple. But it also can be more rewarding. So I think we finally are seeing a breakout that I forecast. I had almost wanted to bring up my report from 2 months ago, saying that this is what was going to happen, and I got it right so far. I'm not going to pat myself on the back, but been at it a long time. Experience does help in life, at least most of the time. And a lot of people were very, my members were pretty happy, obviously, but the stocks will catch up too. There will be a time, I think, where people actually see the gold stocks as value plays right now because they're trading on the metrics of of $2,000 gold basically, and of course we're at 3,300 or so. So those bets will catch up. One thing I said in my last interview, I'll state it now because we always have different listeners, but one thing I learned the hard way was the last bull market when gold peaked. I sold my gold stocks too early because the gold stock kept going up, even though gold hit 850 and came down and kind of consolidated around 600. And I'm like, well, why did my gold stocks keep going up? Well, stocks are based on earnings, and the earnings a year before for those gold stocks was like 300. Now the
Um,
earnings were 600. So those stocks went boom, boom, boom. It kept going up and up. And I'm, God, I'm missing the boat. Should I get back in? What am I doing wrong? And so I don't think I'll miss it this time. But it was a good lesson for me. I paid for it a little bit. You never go broke taking a profit, as the adage goes. But still, when you're right, you've been patient, and you see it working in your favor, and then you see it, God, what, gold top. What's wrong with me? It's like gold topped. Gold stocks haven't.
how much of a lag is there between the two?
6 months.
6 months.
They lagged 6 months. Now, whether that'll hold again this time or not, I don't know. I watch the markets pretty carefully. I'm not perfect, but you know, most of the feedback I've gotten from members lately have been, pretty positive. I've done what you taught me. I've got, very blue chip stocks, doing well. Taught me to write calls against my positions so you can get income that way. Most of them are pretty happy. I mean, you can't please all the people all the time, obviously. I'm in a unique spot because really all I do is resource stocks. I do rare earth elements and, the lithium, the cobalt. But right now it's primarily gold and silver. I mean, that's where the market's the most flush. Our uranium stocks have done pretty well.
Hmm.
But, so it's more than just silver, as it should be. It gives you better diversification. But, that's just part of your portfolio. I mean, what I teach should be used for like 20% of your holdings, not 100%. Although there's people that are resource investors, that's all they want to invest in, and that's their choice. But really, for a balanced portfolio, you just want a portion to be in, resource companies. You don't
Are
want.
are we able to extrapolate out how much juice this run in silver and even gold so has from here, given past historical performance?
We can. I mean, that's really subjective, not objective. So it's my opinion, but based on what happened when I was a young man and watching, silver go from that, $5 level up to 50 in a very short amount of time. I mean, my futures contract in gold was $300 gold, and that was a record high when I bought my futures contracts. And here it was like a month and a half later, it was at 850, and I got out at like 7. I mean, when you're a young guy and you make that kind of a score in that kind of time, you think you're really, really the cat's meow, but that doesn't last very long either. But based on the past, the best performance in silver is in an inflationary environment, not a deflationary.
Hmm.
And based on that being the market got so frenzied because gold got so expensive, a lot of people said, gosh, the dollar's going to fail. I need to buy precious metals. Gold's too expensive. I'll buy silver. That happened at the very end of the market. That could carry over, except this time it's a global phenomenon. It's not a US only phenomenon or US and Middle East. The Arabs were in on the silver market with the hunts, but those weren't even the Arab people. It was the shout, the sheikhs basically. So this time, the general population worldwide, I mean, some countries not particularly, but most countries, they have access to the internet and they can buy, gold and silver over the web. So there's a lot of, let's say, potential demand that's not surfaced yet that I think will take off. So, I mean, I've said in the past, could I be right? Could I be wrong? Yes, I could be wrong. I think this next run, when it gets to the manic panic, I've got to have it, fear of missing out. I'm going to die unless I own precious metals. We get to that mania phase. I think it'll go in the record books. I think you'll see a shift out of bonds and equities, real estate into the metals, and it'll be maybe 3%. But right now, if you're at a 0.5%, that's a six-fold increase. You have a six-fold increase into a market as small as the silver market. I'll give you another example. There's basically $5 or $6 trillion sitting in money markets. So 1% of that is $50 billion. $50 billion. Let's do six trillion sitting in there. It's 2 times the annual silver supply. So 1% of that money going into silver is 2 years annual supply plus recycling. And if you don't think 1% of that money will go into silver, then I've got a bridge to sell you. I really think as things accelerate or deteriorate more, that the panic manic buying will surface into the metals, and more of it may go into silver at the top than went into gold as far as percentage wise, because silver at 60 looks a lot better than gold at 5,000, or silver at 100 looks really cheap than gold at 7,000, or whatever the ratio may be. And then all of a sudden it takes over, as we talked earlier, where instead of being 100 to 1, it's 50 to 1, then it's 30 to 1. It's already been 33 to 1. I'm looking at that as a minimum. So when silver is 1/3 the 33 times, gold's 33 times the price of silver. So but right now that'd be basically $100 silver, right? So 100 times 33 is 3,300. So when we're in that range, I'll be taking a hard look, see if that's it. We're going to double top, or is it going to go to the historic ratio of double that, 16 to 1, where that's where it got in 1980 high, right in that range. And of course, that would be, a phenomenal run for silver investors versus even owning gold.
Yeah, definitely. Before we close things off on silver, I do have a question from one of my members on Substack. His name is Jack Lyons, and he wants to know, a lot of the case for silver demand originates from solar adoption. But if this technology sees a waning or does not meet projections, would this negatively affect silver price?
It would if it were the only market for silver. But all markets move on the margin. Where is the biggest swing in demand? And the biggest swing in demand is monetary demand.
Hmm.
So that's where it can go from being very benign, where it's very low and no one cares about buying silver for investment, to very high, as I just described. And that can overwhelm any industrial demand. I mean, think about it. If you think your money's going to fail, what are you going to do? You're going to do everything you can to protect your wealth, or what you have, your savings. And therefore, you're going to go where you trust it the most. And there's no trusted commodity on the planet that's more trusted than the monetary metals. So that will way exceed any industrial demand at some point. Right now, that's not the case. Just to carry that a little further, I mean, graphene could be used in a solar panel. It's uneconomic to do so right now. Silver is so cheap, but graphene's so expensive. But there could be substitution, and would it have an effect on balance over like a 10-year period or whatever? Certainly, but we're in the end game right now. We're in a position where people are really concerned about their financial well-being, and they don't know what to do about it. And very few people are really aware of why the precious metals are important to hold as a savings account. And that will become more and more known as time marches on. So I think that's the best answer I can give.
Gotcha. One more question before we wrap up here. This is relating to oil, which may tie into the precious metals bowl. Let's go ahead and take a look at the price action on oil here for a bit. 64.46. It's closing up on the week, and if you look at the daily candlesticks, yeah, it's been moving up on higher since the start of May. And from a technical standpoint, technical analysis standpoint, you've got this bull flag. If you go down, if you do the TA thing, got this bull flag coming down, which is a continuation pattern to the upside. What's your take on oil, in oil's relationship to where we are in this precious metals bull market? Because what we saw in 2020, we saw the precious metals run, and then the resource complex run thereafter. And of course, oil is the master resource of that. So how do we piece that puzzle together?
Very bullish oil. We're going to be writing about it in next month's report. I've only suggested a couple oil companies over the years. They're not in my report. We might be recommending one or two this month. I kind of doubt or July, but we like it. And I'm waiting for the right entry point. I broke that bull flag. I'd probably look at the top, conservative blue chips that people could get into. But the world runs on energy, not on money. Money makes the world go round. Not really. Energy makes the world go round. And oil is very cheap and it's very much needed and it's not going away anytime soon. And really, I think there's an opportunity there. I just want to find one or two or three suggestions for my subscriber base that can be. I wrote an energy letter for a year with a an associate in the UK in London, and it was a lot more work. It was hard. I got some help, and every one of those things, except maybe one, is done really well. But I was early. I'm usually early, and that's okay to be early. But if you are early, then you got to be patient. People see Nvidia going up or, Google or, and it's like, well, I don't want to wait for my investment to take off. I'm jumping ship. And they have every right to do that. But I don't really want to go through that sector again. I mean, I'm okay at it. I'm not the best, but I know what to look for when picking a stock. So I'm glad you brought it up. Um, if you're really conservative, it's kind of a contrarian investment. But
Mm.
I think if you're buying oil at 60-ish and you have some patience, an it's almost a gimme. Now you want to start off with blue chips. You don't really want to start off with, some driller sitting there in the, offshore in Texas that's going to hit it big in the Gulf. That's not the way to do it. But as far as a long-term, investment, and a lot of people poo-poo the peak oil theory. I'm a believer in it. I don't think that people understand what peak oil really means. Doesn't mean we're running out of oil. It just means we're running out of cheap oil. And we are, my studied view. So there's a lot there. Glad you brought it up. Glad you showed the chart. I really like this SteamYard platform. I have it now. I've only used it a couple of times, but it really gives you a lot of flexibility, to bring up
Mm.
while your guest is talking. It really helps. It's really helpful to the audience. So thanks for doing
Yeah, definitely. I don't get paid by StreamYard, but
that.
StreamYard, if you're interested, my email's down below. But aside from that, Dave, thank you so much for coming on, my friend. Anything else you want to bring up before we wrap things up here?
Yeah, one last, because I usually have most of the interviews, Danny, have talked about my documentary, and it's about 80% complete. My main producer has gotten ill, and so I've had to find a new editor to finish it off. And I have one in the UK, and I just sent him like a retainer, like you would a lawyer, to start working on it and finish it off. So I'm hoping to have it completed within about 2 or 3 months. And so don't give up, folks. The Silver Sunrise, looking at the monetary elite's control and fear-based monetary system and how to overcome it will be accomplished, just not as early as I had planned.
Hmm. So, what happens to the elite class once they lose control of the silver market? Because the silver market is really where they can get their industrial base built out, their military industrial complex built out, and silver is really the lifeblood of, much like oil, kind of the secondary lifeblood of the economy. What will happen to their system once silver starts becoming unchanged?
Well, I think the whole system will be changed, and I think that silver will be like the final indicator more than it will disrupt the whole system. In other words, so many things will be topsy turvy. The food system will start going out of this GMO paradigm into more better organic food. We'll be more, trustworthy in our financial affairs and maybe a more honest or hopefully an honest monetary system. I think more transparency. I mean, that's the way I think it will go, or certainly believe it could go that way, although we hear the contrary all the time. And so what will happen is the pricing mechanism will be fair, free and fair. So they'll be able to buy silver, but it'll be at a different modality than it is now. It may sell for 1/10 the price of gold, and that's the fair market price because that's what the market is determined in a free market, that's what the value of it is. Oil could be, $200 a barrel. I mean, I'm not making these forecasts to be cute. What I'm trying to explain is that almost all these markets, especially on the commodity side, have been suppressed, and we're not really getting a true pricing mechanism. And that's done mainly through the derivatives market. Remember, there's a huge debt worldwide, but the derivatives market's something like 1 quadrillion. I mean, it's insane how many bets there are, and primarily they're on interest rates. And as interest rates go contrary to the powers that be want them to come down, if the market actually takes over, which it could and looks like it's doing right now, and interest rates get forced higher because you got to pay the suckers more interest to take on a dollar that's they know is going to be worth less in the future. So bump up the idea that they're going to get a high yield to keep them in the game. Once that starts to take place, you're going to see more and more destruction, which we're already witnessing, just more apparent, let's say, in the mainstream financial markets. So once the bond market starts getting hit harder, it will spill over into the equity markets. And then people start to see their 401ks, their IRAs, their SEP IRAs, their Roth IRAs, the equivalent Canadian structures start to deteriorate. And they'll get worried, especially the older folks that are looking to, retire. And that's when you'll start to see that momentum into the metals come into the fore again. And when you get desperate, and no one should, but if you do, you will buy almost at any price. That's how you get these astronomical highs, is that people think that, they don't have a chance unless they do it. And that's, of course, not the case. The world's going to go on. You can have a complete and total 100% financial collapse. The sun comes up the next day and all the wealth is still there. All the wheat fields, all the oil, all the gold, all the housing, all the freeways, all the automobiles, it's all there. So that nothing changes wealth wise. What changes is the distribution and the pricing mechanism. And then trust. That's the main factor. How do you trust the system?
Yeah. And at that point, it becomes sort of irreparable, at least for a generation's time. David, thank you so much for coming on, my friend. Where can people find you if they want to see more of your work?
Yeah, just go to themorganreport.com and get on our free email list. And there's a click to all of our icons at the top right if you want to find us in other locations.
Awesome. We'll have the links to the Morgan Report down below. Check it out, guys. If you're interested, if you got value out of this video, drop us a like and comment "Go David Go" in the comment section. If you disagreed with anything, that's fine too. But let me know what you disagreed on. I do, in fact, read the comments. So let me know your thoughts. Subscribe to the channel. It really does help boost this video and our channel up in the algorithms. Liking, subscribing, doing all that stuff. Also, check us out on Substack, where you can ask questions to my guests, like Dave, like we just had. So if you want to ask any questions to any of my future guests, or just get the 411 and who's coming up next on the show, check out the Substack. You also get access to all my stuff early, ad-free, and uncensored. So for the videos that warrant it. So with all that said, thanks for watching. See you later.